You understand what I'm saying? So you can join us on all our social media platforms. Let's quickly take the business headlines. Nigeria's growth prediction for 2023 and 2024 has been lowered by the World Bank from the 3.1% it had predicted for the country in June of 2022 to 2.9% forecast. This was issued by the Washington-based organization in its most recent global economic prospects. According to the bank, this forecast was brought on by struggling oil and gas industry, insecurity, flooding, and growing production cost. Additionally, Sub-Saharan Africa growth forecast for 2023 was revised downward by 0.2 percentage points to 3.6%. However, it was anticipated that the region's growth would accelerate to 3.9% in 2024. According to the Ministry of Petroleum Resources, the federal government disbursed nearly 173.2 billion naira to equalize more than 11.6 billion liters of petrol between 2019 and 2022. The Minister of State for Petroleum Resources, Temipre Silva, reported in the document that a total of 255,659 truck outs were equalized during the review period as part of measures to abolish the smuggling of PMS across Nigerian borders. Between 2019 and 2022, the intervention funds allocated by the central bank. Okay, let's quickly take this story very quickly. Okay, let me take the next one. The intervention funds allocated by the Central Bank of Nigeria under its export facilitation initiative increased to 44.58 billion naira in October 2022. This was reported by the bank in remarks made public following the 2022 meeting of the Monetary Policy Committee. Currently, 2.15 trillion naira has been disbursed under this facility to 437 projects nationwide, including manufacturing 240 projects, agriculture 91, services 93, while mining sector projects 13. Meanwhile, foreign investment in the agricultural sector decreased by 37.9% year-over-year in the half-year ending June 30, 2022, which is reportedly indicative of the multiple difficulties in the Nigerian agricultural industry, particularly with the insecurity issue. A record number of businesses and government leaders will descend on the Swiss resort of Davos on 16th January to ponder over challenges ranging from global economic slowdown to environmental collapse as the World Economic Forum returns. The World Economic Forum Executive Chairman Klaus Schwab told the pre-meeting news conference of a week-long set of discussion panels, informal gatherings, and events under the banner of cooperation in a fragmented world.
At the beginning of the new year, looking ahead to our future, characterized by unprecedented multiple crises. And even worse, those economic, environmental, social, and geopolitical crises are converging and conflating, creating an extremely versatile and uncertain future. So far, looking ahead, it's no surprise that generally we are all stuck in a crisis mindset. And that leads to short-term decision-making that may have long-term unintended damaging consequences. Davos should help to shift that mindset.
We expect a high-level Chinese delegation and participation. We have the new presidents from Korea, the Philippines, and also high-level delegations from other Asian countries.
damaging consequences. Davos should help.
Taiwo Oyedele, fiscal policy partner and African tax leader at PricewaterhouseCoopers, has called on the National Assembly to consult with government agencies in heeding to the President's request concerning the deferred 2022 finance bill. He also noted the public interest in consultations, adding the need for continual improvement of bill passing procedures. Take a listen.
Signed the budget into law, I think it was last week, but deferred the signing of the finance bill because the president had some comments and reservations about some of the provisions in the finance bill and requested that the National Assembly make some corrections and also to provide the avenue for consultation with government agencies. I thought it was instructive that the president was particularly interested in consultation with government agencies. But for the rest of us, we are also interested in consultation with the public. The National Assembly, the Senate, and the House of Rep on the 21st of December published the finance bill as was presented to them by the executive, and the Senate asked for a public hearing the following day, barely given 24 hours, which I thought would be a record of any democracy anywhere in the world. Because just imagine what's the time that you have to read the bill before you send your submission, if you are not in Abuja, before you book your flight, and all of that. The House of Representatives gave 13th of January as their own public hearing, and we thought that was at least decent enough, only for the House of Representatives to then turn around, pass the resolution to override their own rules, and then pass the bill without any public hearing. So essentially, I can say to you that the National Assembly, as far as I'm concerned, passed the Finance Bill 2022 without input and consultation with the public, and that's not good enough in a democracy. We should be improving on what we did in the past 3 years as far as the Finance Bill is concerned. Override their own rules and then pass the bill without any public hearing. So essentially, I can say to you that the National
All right, let's quickly take you through the markets. Like I mentioned earlier, markets across the world are currently trading. Where did we end yesterday? I will start from Nigeria. Of course, they say charity begins at home. The local equity market suffered on Tuesday as the key all-share index dropped by about 48 basis points to close at 51,446.60 points, as you can see right there on the board. Significant sell-offs in the telecom stock, that's Airtel Africa, which caused the all-share index to fall yesterday. We're at the center of market performance. What I'm saying in essence is, let me break down the English I'm speaking. Because we saw, Airtel Africa move in the negative territory. We saw that impacted the market. The bearish bias is also expected to lessen during today's trade. Let's hope so. Yesterday, the interbank rates decreased even more as the stability of the financial system's liquidity was maintained. We saw that yesterday there was a decrease in interbank rates, the overnight rates as well as the open buyback rates. But in the Treasury bills market, it maintained a bullish slant. Today's activities are expected to be skewed towards the Treasury bills auction. Yesterday, we saw that the federal government local bond market traded in the bearish mood as investors awaited the publication of the federal government bond calendar for 2023. Meanwhile, in the Eurobond market, it was a volatile trade. That was yesterday. That's in the Nigerian market. Now let's move over to Ghana. The first quarter of 2023 will see the sale of $200 million by Ghana's central bank to companies that distribute bulk oil. They call them BDCs, bulk oil companies. Nevertheless, it's still unclear if the planned sale will be enough to meet the BDC's ongoing FX needs. Now, if we move over to Kenya, the Central Bank of Kenya reported that the value of mobile money transactions increased from 6.24 trillion Kenyan shillings to 7.2 trillion Kenyan shillings over the course of 11 months period from January to November of 2022. The number of mobile money transactions increased to 2.07 billion in the report that was released from 1.97 billion, and that's an increase of about 4.9%. Now, that expansion defies both the CBK's, the Central Bank of Kenya's, decision to reintroduce fees on low-value cash transactions and the economic slowdown that was visible in the first 3 quarters of 2022 due to concerns that the use of cash may spread COVID-19. The Apex Bank also eliminated mobile money transfer fees for transactions under 1,000 shillings. I was speaking with a colleague yesterday, and so was it yesterday? Yes, yesterday or 2 days ago, that those concerns were also being raised here in Nigeria. Should we see a scrap of mobile money fees for certain amounts of money, especially for the poor, now that we have new design notes and new cash limits? But I guess that will be for the Apex Bank here in Nigeria to consider. Now, let's quickly move ahead to the United States, I guess. Yes, the United States. Are we there now? Talking about how stocks fared. You can see all red numbers as it were. Talking about the United States, stock futures were slightly higher as Wall Street sought to build on the promising start to 2023 so far. Now, let me tell you that in 2022, the U.S. Fed, which is the U.S. Central Bank, or they call it the Federal Reserve, increased interest rates 7 times. And this year, the Fed has hinted that additional increases are likely. Over here in Nigeria, we saw in 2022 that the central bank raised interest rates 5 times. Will there be more interest rate hikes? We'll get to see that. Meanwhile, in the United States, investors are getting ready for this week's additional inflation data, including the release on Thursday of U.S. If we move over to European markets, they opened mixed. Asian Pacific stocks were mostly higher today. That's overnight as we were sleeping. The mainland and Hong Kong last weekend saw the return of quarantine-free travel in China, signaling the end of the zero-COVID policy, which effectively closed borders for almost 3 years after industry data revealed an unexpected increase in fuel and crude inventories. Now, talking about oil price. Oil prices declined on Wednesday, wiping out gains from the prior session as investors refrained from placing significant bets ahead of crucial U.S. inflation data due later this week. For gold prices, we're seeing it in a constrained mode, was trading around $1,888 an ounce there. All right, let's quickly take a break, and when we return, my guest will be joining me. We will be looking at 2023's budget, a budget of 21.83 trillion naira. We'll break those figures down for you, and I'll try, to make you chew them, digest them, and all in all, to make you understand why you need to know what is in the budget and how it will affect you. Because some of you will say, the budget of this has affected me. One way or the other, it does, because it's actually government policy. We'll be right back after this break.
untold. We restored democracy. We initiated due process. We created the EFCC and ICPC. We brought Nigeria out of debt by achieving $18 billion worth of relief and $30 billion overall reduction. We revived the rail system. We upgraded agriculture. We brought in the mobile phone and digitalized Nigeria. Under the PDP, the Nigerian economy was the strongest in Africa. Though Nigerians made their choice, today we all know better. Nigerians, do not despair. Hope is in the horizon. We are putting in the work and refreshing our drive to rescue and rebuild Nigeria. Together, let's make it happen. PDP. Power to the people.
All right, welcome back to the program. My guest is joining me right now via Zoom, Dr. Afolabi Olowokere, who is the Managing Director and Chief Economist at Analyst Data Services and Resources. Dr. Olowokere, welcome to the show and thank you for joining us today.
Thank you. Good morning, Nancy. Good morning, our viewers.
Good morning.
Thanks for having me.
Good morning to you too. Welcome again to the show. Now we're talking about 2023 budget. Let's get started from the title. Really, or the theme of this year's budget, which is a budget of fiscal consolidation and transition. Why do you think this is? Why is it a budget of fiscal consolidation and transition?
Okay, maybe we can start from the transition part. I think Nigeria has a history of naming budgets, not only at the national level, but also at even sub-national level. There are some state governments that have very interesting titles that they give to their budget. If you look at 2015, for instance, our budget was also themed Transition and Hope. In other words, for most times, the year of the election, we always having transition. So it's a way of saying we are transiting from one maybe government to another. And also may also be a way of showing that we are transiting from a very low level to a better level for the country. But when it comes to fiscal consolidation, I think that is where one day has to look at, are we speaking economics or politics? Because in the real sense, fiscal consolidation in economics can be described as government policies that are intended to reduce deficits and then reduce accumulation of debts. That is like an economic definition of consolidation. Whether that is what we are doing is a big question. In the short term, of course, that is not what we are doing. But maybe those that name the budget may be able to justify that we are taking steps towards reducing our deficit in the future. In other words, maybe whatever we are doing now in accumulating debt is to ensure that we have lower debt in the future and lower our deficit. But you may not be able to match or marry the way we expand deficits with the acronym or with the phrase fiscal consolidation. Thank you.
Okay. You're dragging me into debt already, and I know there's so much talking about debt in this year's budget, but let's quickly take this and let's quickly take the card which we've prepared. What you need to know about the 2023 budget, and I would take it from there. But I want our viewers to just take a look at some highlights of this year's budget. Like I mentioned earlier, budget of fiscal consolidation and transition, an approved aggregate expenditure of 21.8 trillion naira, which is the highest so far in the country, talking about aggregate expenditure for the country. 2022 budget implementation extended to March, and of course 819 billion naira supplementary budget for that. A budget deficit of 11.3 trillion naira to be financed by borrowing, just like the doctor was mentioning earlier. We will dig into that in a few seconds. The budget deficit hits a high of 55 trillion naira from 2015 to 2022, and that budget deficit is expected to rise to 77 trillion naira if the CBN loans are securitized. The CBN wins and means that the CBN loans to the federal government is at around 22 trillion naira. So if that is securitized, according to what the DMO is saying or is canvassing, it will push our public debt to 77 trillion naira. Now, the borrowings, as you can see from local sources, 7 trillion naira, foreign 1.76 trillion naira, multilateral and bilateral loans 1.77 billion naira, privatization proceeds 206.18 billion naira. Is that really even privatization proceeds or even financialization? But Doctor, now let's dig deep into that very quickly, talking about the budget deficit and the debt. What are your views? I should say perhaps that's the most sticky point in this year's budget. What do you think?
Yes, it's a major point in this budget. You rightly said we've accumulated a lot of deficits over years, and accumulation of deficits definitely lead to your current debt level. You are going to accumulate debt for many years. It accumulates and then it becomes debt. Then you are going to be paying paying a coupon or interest or whatever you are paying on the debt, and that's a lot of implication of what you do. But let me start from this. We've said this point before, and everybody mentioned, I think I hear you mention that on many of your programs before. Borrowing itself may not be the bad idea. I mean, if you don't have something and you desire a good life, and borrowing is the only choice, I mean, sometimes it may be the one that is closest to you. You may have to borrow, but the question always is that what do you borrow for? And how efficiently were you able to utilize the borrowing? And the third point is that the implications, what are the tied to such borrowing that you are doing in terms of how many headrooms, how much is your headroom in the future, what do you have to trade off for you to be able to maintain those? So in the case of Nigeria, for instance, as you mentioned, we are looking at a deficit of a large deficit of about 11.34 trillion in 2023, but that is very huge. That is far higher than the budget of Nigeria for about 4 or 5 years before
even in 2020
the current administration put together. So we have a huge debt. Borrowing, as I said, not a bad idea, but how efficiently are we going to use this? And major point is, what will be the implication of this on the rest of the economy? Where are we getting this money for? We are getting the bulk of the money from the domestic economy. We know the implication of that on crowding out. It also has a positive aspect. People that trade in bonds, people that have contributed to their pension, PFEs and the rest, and some institutional investors as well as mutual funds are able to see opportunity to invest their fund if they actually have a fund. But in terms of what the real sector will be able to borrow in the market, they are then crowded out by the federal government because of this. And deficit financing, as we all know, is also inflationary. So it then implies that the government is going to inflate the economy. When you then compare that with what the central bank does in trying to mop up money every time, then you then want to wonder how coordinated are the fiscal and monetary policies in the country. Another implication of this is that if we are unable to get all this borrowing from the private sector, as we want to do, we may still have to resort to the central bank. So it also has implication on the balance sheet of the federal of the central bank. And lastly, it has to do with capital. Oftentimes, when we are unable to get the kind of money that we want, it has a lot of implication on our capital expenditure. So most times, you have a budget that says I'm going to spend 4 trillion or 5 trillion on capital. But at the end of the day, in this year, for instance, we are looking at 6.46 trillion to be spent on capital. But last year, we were looking at about 6.23 trillion when you look at the budget and the supplementary. And at the end of November, we've just done about 2 trillion. We are even projecting that if it goes up to March this year, I mean, that is 2022 budget, we probably may be able to do about 4 trillion. So most times, our capital expenditure is not up to what we look at in our budget when we look at the actual. So debt has advantages, it has disadvantages, but a country has to be able to balance it and know how well it can make use of the debt, especially in developing economy, where many of the buyers of those instruments can also be foreigners, which also has implication on foreign exchange. So Nigeria needs to find a way of financing its budgets, not only through deficits, because you can't expand debts or deficit forever. You must have surplus at this time to pay back. But I think it's something that the country needs to work on. It's important for our budget to be large, but it's also important for us to be sustainable in our debt management.
I like the idea that I like that you brought up the point of, just like I mentioned earlier, 21.83 trillion aggregate expenditure for this year. This is the highest so far in the history of budget making in Nigeria. And it seems to always increase year by year. And we must also say that, of course, the budget deficit of this year is higher than even 2020's budget, as it were, just 2020, 2 years ago. The amount of, it's really mind-boggling. Just 2 years down the line, that our budget deficit was higher than the entire budget of the country just 2 years ago. Now, the question I would want to ask you is, dovetailing from what you said at the later part, which is looking for other options. What other options are there right now for the government apart from debt? I know that a lot of analysts are also talking about even equity and all of that. What do you think? At least you should have an idea of that too. And are there other options?
Yeah, there are options that most countries like us would do, but I think it's always very difficult. And I think that option, I will mention it, but I also come back to a caveat. We just have to raise, we have to increase our domestic resource mobilization, and that means taxation. Of course, not all of us like that. It may not be, I mean, government also has a smart way of speaking around it to say, oh, we will not increase the rates, we just want to burden the base. Whatever the name is, we just have to do something about resource mobilization, basically, in a sustainable version. But the problem with that is that people must have trust in the government. People must know that my money will be utilized for common good. And they must also not see that, I mean, somebody says I pay tax, then I hear corruption cases tomorrow. Even though you may not be able to link the tax that you have paid, or you have just paid 10,000, but you have 1 billion case of corruption. I mean, your 10,000 is just it's a drop in the ocean of that money, but you have this feeling of, why must I pay? So I think service delivery, if we have governments that can build trust among the people, and then be able to show that I need this money, but when I spend the money, it's for the common good, and people can see the result. I think that is a sustainable way to build an economy. But you may not achieve that in the short run. So that's why most governments will try to say, can I borrow so that I can have facilities that can ease production activities, ease movement and things like that. And then later I can layer it with taxes, and then people will be willing to pay. But I think we also need to be more transparent in what we do in that area. Borrowing is an option, is what we do. Privatization is an option. But our experience with privatization, we have to be very careful. We know what happens to discos and the rest. We kind of sometimes lower standard for different kind of people who may not have the balance sheet or technical expertise to come into our sector that we have privatized. So that is something that we also have to work on. But in the immediate time, we need to start thinking about, what are we even spending money on? how can we be more efficient? How can we, there are two ways to increase your profit. You either increase your sales or you reduce your costs.
Yeah.
Sometimes it may not always be for us to always find a way of increasing our sales. We may actually find a way to reduce our cost. What are we spending money on that we are not supposed to be spending money on? Let me give you an example. I was looking at this budget and I was comparing it with the budget of several other countries. Actually, I was currently doing a work trying to see whether this budget aligns with the National Development Plan. And most times you see variances here and there. In many countries like Malaysia, Singapore, or even Canada, and India, Brazil, the portion of their budget that goes into defense and security sometimes is between 1% and 5%. But we are having close to 14% of our budget that goes into that. We understand that is a situation that we have found ourselves, but we also need to start in a sustainable manner to see, are there other issues, are there other ways of solving some of these insecurity problems apart from fighting and buying guns and things like that? Employment creation, making people feel more involved and things like that. Maybe there can be national orientation. There can be other ways of also solving problems. We spend money on education, we spend money on infrastructure, but we also have to efficiently spend money on these things. Let me now end with that of infrastructure. Infrastructure financing is very important. There are places where it has been commercialized a lot, even though we have to be very careful as a country because we have some kind of very interesting or vested interest individuals. But we then, as a country, must be able to innovatively finance infrastructure. Government budget may not be able to adequately finance infrastructure. We must be able to see infrastructure that are efficient, be produced and efficiently managed. There are capital in different parts of the world that may want to come into our infrastructure. We can design our terms. I think ICRC has been doing a lot of work in that area. But we need to, as we go into the new government, we need to see more of that. We need to see roads that are tolled, if they are properly managed and the costs are affordable. We need to see bigger vehicles that can move people around so that cost of transportation can be lower. We need some kind of private provisioning of basic infrastructure that also creates markets and also enable private sector to thrive. If we rely on our annual budget to finance what we need as a country, we will go to what you just said. It's a trap. Incremental budgeting system. Every year, we are going to be adding 5 trillion or 4 trillion to our budget. But even in our budget, assumption of growth, we should 2%, 3%. Then somebody would then ask, where would the extra 3 trillion or 5 trillion go?
So that question should really be for those of you that are economists, because if you're seeing having a budget of 21.83 trillion naira and your growth projection for this year is about 3%, which is around population growth in Nigeria. So how do you balance it out? But one would say there is a deficit of about 11 trillion naira, and that's 21.8 trillion naira. So how do you really balance that this quantum or this budget size, and you're having a paltry 3% growth for the country of over 200 million people? But that would be for those of you that are economists to answer and to see if you can really balance and rebalance and adjust there. But quite interesting also that you mentioned, let's talk about even private sector, because very interesting for me in this budget is that 22% of this total budget, the revenue rather, will be gotten from all sources, then 78% from non-all sources, which includes both non-all taxes, independent revenue, and others. What does it really say for chasing or getting monies to finance this budget from non-all sources, also including private sector?
Okay, so it's very, very simple. There may be smart way of saying that people will pay more taxes, I think it was Reagan that said that when government says we are your friends, we want to do this on your behalf, they probably will come back to tax you more, So we private sector definitely have to base up for more taxes because government needs money. And it's also very difficult for government to lower its expenditure, be it, or it appears to be difficult, be it recurrent or capital. We always want more capital, but without also reducing our recurrent. So definitely our budget will always be rising. So private sector will have to pay, whatever the name is called, whether the name is say we have to exclude some people, introduce some things in the Finance Act, go into spectrum, into telephony, or go into maritime. There will always be any sector that is doing well to actually pay more taxes. Another thing is that businesses, especially the corporate ones, especially the ones that are formal, and that's another issue that Nigeria needs to start dealing with. It's important to be emphasizing MSME, but more importantly, in many places, we must also find a way of integrating and scaling them up. MSME are very useful, but you must also find a way of having big firms. So for the little big firms that we have, they are the ones that probably will pay more in terms of what the country needs. Another one we should mention, and I think is one credit that we can give to the current government, trying to bring the government-owned enterprises into the budgeting process. I think at the last count, they were able to bring about 62 or 63 into the current budget, trying to see some of these agencies that also have money. Let's start bringing. By the way, that is one of the reasons why our budget looks so big. If you compare our budget of now with that of 2010 or 15, you may see big gap. Yeah, we have done more in terms of the size. We have also done more by bringing some of GOE's budget into the FGM budget. So that has also kind of increased. That's why this is the 80% budget including GOE's, budget excluding GOE. So when we are comparing number, we should also always consider that, especially when we are doing trend analysis. So bringing the GOE into the budget, into the framework is also very useful. So they can be more prudent, and I think federal government can then get more money for them. And I think that is why we are looking at a lot of money in terms of GOE's remitted surpluses. And that will also go into the independent revenue of government. I think government is looking at a high value in terms of independent revenue. It's looking at about 2.62 trillion in this budget. That's a lot of money. And if that money can come in, I think it's so. Two ways. Government will make sure that its enterprises pay more. So whoever had the CEOs of those enterprises, they know the implication of this. I've spoken to some of them before. I know that some of them are even constrained, but they still have to pay because that is what they got. That's Appropriation Act is a law. They have to comply. So government enterprise will pay more, and the private sector is also not excluded. So we then have to find a way of balancing that against our assertion, our conviction that we want the private sector to grow, we want to give incentives to private sector. And I think sometimes people have to sit down on the table and then address and say +1 - 1. Are we at 0? Or it's even +1 - 2? Maybe we are at -2. And I think that's one of the points that Taiwo Idili was trying to say made on your program earlier. We just have to see how much taxes are people really paying. Is it even productive? Is it something that they would like to do willingly? Or most of them would rather evade such taxes or avoid such taxes or fly to other part of the world to do their businesses?
Now that you brought the issue of taxes, of course, in this finance bill, the proposal, we're not saying that VAT will be increased, though VAT is still at 7.5% to the best of my knowledge right now. And yes, at least last year, and even I think in 2021, we saw that VAT contributed VAT collection, VAT revenue contributed significantly, at least to government's revenue. But there's also a lag there, whereby we've seen that because of non-compliance, we've seen lost revenue of VAT of about 3 trillion naira. If the government is saying now that it's going to be getting about 78% of non-oil revenue, of revenue from non-oil sources, the government is not going to increase VAT, at least for now. We know that CIT and PIT is still where it is right now. No increases yet. How should government mobilize this revenue? Bearing in mind that this is also a worsening economy, an economy that is struggling. Let me put it that way. Taiwo Idili said something to me when I spoke to him. He said, of course, the IMF says that Nigeria will not be in a recession. It's not among the countries that will be in a recession. But it will feel as if we are in a recession. We will not go into a recession, but it will feel as if we are in a recession. So for companies that will be feeling recession feelings, yes, how do you expect them to fare? Yes, go ahead.
Okay, let's look at some statistics, for instance, looking at recently. Our whatever we have as budget revenue, we always don't meet up. So that's also kind of is a more problem to the system. Let me give you an example. In 2020, we said we will make 5.4 trillion. We were able to make 3.4 trillion. In 2021, we said we'll make 6.6 trillion. We were able to make 4.6 trillion. And before now, before the supplementary budget or the latest statistics, which we saw in the minister's presentation, when after the appropriation has been approved, we said we'll do 8.2 trillion for 2022, and we are likely going to do less than 5 trillion. So the first question is that are we going to do the revenue, which is that we are looking at 10.49 trillion? Given that last year, when we say we'll do 9.97, putting everything together, we were able to do about 7. So by my estimate, we probably would be doing around 8 trillion, between 7 and 8 trillion, not the 10.49 trillion. That is one. Especially if you consider that we are moving to an election year, we may have a lot of issues. We may have people have to do quite a number of interesting things. In fact, it's possible we will have lower revenue in 2023 than 2022. Except if something is done by exchange rate, if we have a devalued exchange rate and then convert the oil money into naira, it becomes a lot of money. But that will not be much, especially given that we are looking at the non-oil sources. So we are still constrained, but it's always very good to have this assumption of we can make 10 trillion revenue. But from which economy, we are coming from a weak source. Monetary policy is doing its own to take money out of the system, and businesses are constrained. Exchange rate is a major challenge to businesses. Some of them are unable to get artificial. The black market rate is way off what they can afford. I mean, I'm sure you go to markets these days, things that were sold for 1,000 naira, now they're probably sold for 1,600, 1,700. And businesses are, very innovative way. Some of them even reduce, they don't increase the price, but they reduce the grammage. I took some, it used to be 500 grams. It's now about 450 grams or 400 grams. So those are implicit way of introducing inflation and making, and inflation itself is a tax. So people are already taxed as a result of inflation. People are already constrained because of the accessibility to foreign exchange. Businesses are constrained because of resources, raw materials, and the rest. So it will be very difficult to make it. And we are moving to an election year. We are in an election year. 10.49 trillion is a very good aspiration, which we may not actually realize. But it definitely means that GOEs will pay, and businesses will also have to pay higher.
Okay, Dr. Loroke, let's leave it at that for now, and let's see how this budget will go. There are so many components to this budget, really, and I'm afraid we don't have so much time to delve into that. But I want to say thank you very much for joining us today. Thank you very much, and I hope to see you soon. I've been speaking with Dr. Afolabi Olowokere, who is the Managing Director and Chief Economist at Analyst Data Services and Resources. At this point, let's also quickly remind you, or let's tell you, since there are new Naira notes in town, 1,000 Naira, 500 Naira, 200 Naira notes. And according to the Apex Bank, it has told Nigerians to embrace digital payment channels, also alternative payment channels, which the e-Naira is one of those. Let's also remind you that the e-Naira, of course, has clocked 1 year in Nigeria, and e-Naira is the first central bank-backed digital currency. Some other African currencies are thinking of doing that now. Also, a few months ago, the Central Bank of Nigeria did unveil a USSD code for the e-Naira, *997# for the e-Naira, just like you have USSD codes for other banks. So in the spirit of new design notes, also in the spirit of the cash new limits, that is the withdrawal limits that we have right now, 500,000 Naira for individuals and 5 million Naira for our corporate organizations. The Central Bank of Nigeria is saying that we should embrace alternative channels, including the e-Naira. At the bank, they say that we have close to about 4,000 merchants, over close to 1 million downloads, or even more than that now, and about 8 billion naira in transactions. But we just want to bring that back to you. In case you are not embracing the e-Naira yet, you can do that. All you need to do is just to walk into your bank and they will help you do that. You can actually even do that on your own, because if you go to your bank app, you will see the option of e-Naira and embrace other alternative payment channels that will promote financial inclusion in the country. Let's quickly take this, and I will see you all again tomorrow with another guest, another topic. Be the best you can be and be the change that you want to see. I am Nancy Naji. Bye now.
The idea of adopting a digital currency for Nigeria was proposed in the year 2017, and the idea grew to a technical working team which proceeded with evaluations and stakeholders' engagement, infrastructure and series of testing under President Muhammadu Buhari's government in 2021. With success on all phases, the e-Naira was launched in October 25, 2021. The alternative means to payment is being used by offline payment portals to provide access to services to underserved and unbanked population in the country. This is to achieve the goal of finance inclusion in all parts of the country using offline access.
According to the most recent Global Payments report by WorldPay, the use of mobile wallets exceeded payments by cash globally for the first time in 2021. Specifically, cash usage dropped 10 percentage points to account for just 1/5 of all face-to-face payments worldwide. This reduction is even more dramatic in many developed economies. In these climes, the use of cash for in-store payments fell by 50% or more. In Nigeria, we are observing similar trends as the minting of cash by the CBN has been declining by an average of about 2% between 2016 and 2021. Alongside the use of cash, rapid growth in technological innovations for the financial sector and the surge in electronic payments, which rose by almost 300% between 2019 and 2020, and a further 70% between 2020 and 2021. Furthermore, the absence of a swift and effective solution to these yearnings, as well as misplaced fears that central banks' actions sometimes lead to hyperinflation, created the space for non-government entities to establish new forms of private currencies that seem to have gained popularity around the world, including here in Nigeria. It is on this basis and trends that the CBDC have become a critical part of the conversation in many central banks. A 2021 BIS of central banks found that 86% are actively researching the potential for CBDCs, 60% were experimenting with the technology, and 14% were deploying pilot projects. Given this, the Central Bank of Nigeria commenced extensive studies, consultations, identification of use cases, and testing of the CBDC concept in a sandbox environment as far back as 2017. The objective of the research was to establish a compelling case for the adoption of a digital currency in Nigeria. Following the completion of this preliminary work, we were able to clearly establish that a digital currency, which settlements, related ministries, departments, and agencies of the federal government, as well as relevant stakeholders in the financial ecosystem and the economy as a whole. By June 2021, the technical working team began the conduct of proof of concept exercises, vendor evaluation and selection, deeper stakeholder engagements, technical and business collation, infrastructure and interface development, technical system tests, and readiness tests. Success gained at each stage and the progress with the next stages led to the official launch of the e-Naira exactly 1 year ago, precisely on October 25, 2021.
The governor of the Central Bank of Nigeria, Godwin Emefiele, expressed his delight at the one-year anniversary of the e-Naira, which established Nigeria as the first African country to introduce digital currency. He pointed out that many economic sectors around the world are hesitant to introduce electric wallet despite their significant economic size, but Nigeria took a brave step and did so.
We're proud today to be saying that yes, we are celebrating 1 year of our digital currency in Nigeria because undoubtedly Nigeria remains the first country in Africa to introduce its digital currency, remains the second in the world, even when larger central banks are very skeptical about how many? Yeah? Okay. Even when other central banks, larger central banks in the world are very skeptical about introducing their digital currency because of what they conceive to be the risk, we took the bold decision to introduce our own digital currency. And we're happy that as we speak today, some of the fears that some had, even which we at the time of introducing our digital currency, which was predominantly centered around the risks of fraud and all that, we have not witnessed any. And I think we all give a round of applause. I'm delighted to be here today to celebrate yet another milestone in our journey geared towards transforming Nigeria to a digital economy, and most importantly, building the future monetary system of our country in response to the emerging trends and developments in the global digital space. Pursuant to the CBN's mandate of fostering a safe, credible, and robust payment system, the bank proactively developed the e-Naira, Africa's central bank digital currency, a year ago, precisely October 25, 2021, under the leadership of Mr. President Muhammadu Buhari, given the potential benefits it portends for a digital economy. Explicitly, the e-Naira is expected to enhance financial inclusion, support poverty reduction, enable direct welfare disbursement to citizens, support a resilient payment ecosystem, improve availability and usability of central bank money, facilitate diaspora remittances, reduce the cost of processing cash, and reduce costs and improve efficiency of cross-border payments, among others.